They have, the earnings, the call was very positive. CEO comes out and says straight up, Intel is back. Let's stop there. Brenda, you own Intel. You almost sold it because you were frustrated at where this company was going. Gelsinger now says it's back. Are you a believer?
Yeah, that's right, Scott. We did almost sell the position. And I think the important thing here with this story is that we need to, we needed a new leader in place, which we have, and we need a solid plan and an execution on that plan. Now, that's the piece that remains to be seen. But I think having a solid plan in place with the hope of executing on that plan is a big part of the story here and what was lacking before. So I think that's obviously gone a long way in terms of providing stabilization to the stock. It certainly performed quite well. But now I think, the rubber needs to meet the road, and we need to see execution on the plan from here on out. But we are certainly encouraged by recent developments.
All right. It's named a fresh pick today at Baird. They reiterate their outperform rating. Price target is $85. That represents a 33% upside. I've got a couple of investment committee members joining me now to talk about this. Jenny Harrington, Gilman Hill Asset Management, Pete Najarian. They both own the stock. Jenny, you've maintained all along that this was a ship that was going to turn, and you were staying with it. I'm wondering what you think today, because investors may not be as convinced as you were then, and with what Mr. Gelsinger had to say today.
I like looking at this and thinking about how some investments are long-term and some investments are short-term. And this is a long-term one. So from the beginning, I've been saying, look, I plan to hold this for 3 years, maybe more. And what I loved about the call yesterday was that it built that foundation for me for long-term growth. So I really don't care if today people are being fickle and first they say, oh, I'm going to mark it up 5% and now it's going to be flat on the day. I don't care. That doesn't affect my long-term thesis. What I learned today is that they are investing for growth. And you know that a lot of our investment thesis was predicated on that huge free cash flow generation. And now they're doing something super functional with it. What's the whole point of having free cash flow? It's 3 things, right? Return it to shareholders, grow, or do both. And now they've said we're not just going to return to shareholders through buybacks and dividends, but we're also going to use a lot of that to grow and position ourselves really well for the future. So for me, the whole call yesterday, thinking through this, was just really wonderful, really reassuring that the long-term thesis is intact. One more thing that I think is important. It was awesome to hear that their clients going forward, as they build up these new fabs, new foundry, are going to be Amazon, Microsoft, Google, the U.S. government. You hear that support with all the chip shortages that we've had. You see how important this is to society, to the American economy. So overall, I just feel as comfortable and confident with this investment as I ever have.
Okay.
I'm really happy about what we heard yesterday.
BERNSTEIN'S, Stacey Rasgon, forgive me for stepping on your toes there. He's the #1 rated analyst, and I know you know where this is going, and then I'll get to Pete. Stacey says today, quote, the bull case remains cheap hope. He reiterates his underperform rating and a $43 price target. You have a response to that?
Yeah, I've thought a lot about this because when I was on in October with you and we were talking about Stacey and his super negative outlook then, you think about what's happened since then. He was wrong, right? We were right. Intel's up 33% since you and I had that argument about Stacey's really negative call then. And one of the things that I think you need to be careful with in listening too closely to analysts is that analysts can often, they do amazing work. Stacey knows this company 1,000 times better than I possibly can, right? He understands the chips way better than I ever could. But sometimes analysts get stuck in the weeds. And part of being a good portfolio manager is toggling between understanding the weeds and being in the weeds, but also moving to that 30,000-foot top-down view. And that's what I tried to bring together as we invested in Intel, was the 30,000-foot view, which said, this is a company that's in the top 10 contributors to S&P 500 earnings. It's trading at back then a 10 times multiple. It has huge free cash flow. It has remarkable talent at the company, an amazing board. That's going to come together in a positive way. So you have to be careful with not getting stuck too much in the weeds. You have to bring the two together as you make investment decisions.